BHP has abandoned a renewed takeover approach for Anglo American, and this ends the global miner's short-lived bid to disrupt Anglo's planned merger with Canada's Teck Resources. BHP has confirmed it held preliminary talks with Anglo in recent days, but says it's no longer considering a combination and will focus on its own growth strategy. It's the second time in 2 years that BHP has tried and failed to court its smaller rival. Anglo rejected the latest proposal after finding it wasn't superior to its existing deal with Teck. Now, that merger will create a company worth more than $60 billion. Shareholders in both Anglo and Teck are set to vote on their deal early next month. Naspers has posted a 22% rise in revenue at the halfway mark. That's thanks to gains by iFood in Latin America, OLX in Europe and PayU in India. This helped lift core headline earnings by 13%, and on a per-share basis, the metric increased 24% due to the positive impact of the firm's share repurchase program. The tech giant subsidiary Prosus also posted impressive results. Its e-commerce profits nearly doubled during the period, and the firm says it expects to achieve its 2026 guidance of as much as $7.5 billion in e-commerce revenue. Netcare has reported stronger full-year results, supported by resilient demand for private healthcare and the benefits of its ongoing digitization drive. Revenue for the year to September rose 4.5%, while profit climbed 17%. A total dividend of 85 cents has been declared, reflecting a 21.4% increase on the previous period's payout. Netcare says demand for quality private care remains strong, despite pressure on consumers, and expects further operational and financial gains in 2026 as it continues investing in technology and process improvements. PPC's turnaround strategy is taking hold, with the cement maker delivering a solid set of half-year results. For the 6 months to September, revenue rose 6%, while earnings before income, tax, depreciation and amortization jumped 24%, lifting margins to just over 18%. Now, South Africa led the recovery, with local cement earnings up more than 30%, as cost cuts and improved plant efficiency boosted profitability. Zimbabwe also saw a strong rebound in the second quarter after a planned shutdown. Headline earnings per share rose 15%, but excluding unrealized forex losses linked to hedging for its new Western Cape plant, HEPS climbed 32%. PPC says momentum is building and it expects further gains as its Awaken the Giant turnaround continues to roll out. Oceania has posted a sharp drop in full-year profit as global fish oil prices fell from last year's record highs. The Fishing and Food Processing Group says headline earnings per share fell 38%. A final dividend of R1.75 has been declared, and this takes the total to R2.85. That represents a decrease of 42.4%. Now, looking ahead, Oceania expects global fish meal and fish oil prices to improve, and says its South African and US plants are well placed to take advantage of better catch rates next year. And Invicta has delivered a robust interim performance. That's thanks to strong cash generation and continued momentum in its offshore investment strategy. The industrial group reported a 6% rise in revenue and maintained its gross profit margin at 32% during the half year. Headline earnings per share climbed 15%, while sustainable HEPS rose 19%. CEO Stephen Joffe says the business benefited from streamlined operations and improved activity levels despite volatile currencies, weak industrial demand and ongoing supply chain disruptions. The group says it will continue prioritizing cash generation and aims to return around 30% of earnings to shareholders annually.